Hello friends, in this video we will discuss the topic auditing. The content of this video are introduction of auditing, definition of auditing, objectives of auditing and advantages of auditing. Let's start with the introduction or origin of the auditing. The origin of audit comes from the word audire, which is Latin word. But the evolution of auditing as a financial accountability field in the advent of the Industrial Revolution. Businesses expanded during this period and brought in large-scale production, steam power, improved facilities, and better means of communication. This resulted in the origin of the joint stock form of organization. Shareholders contribute the capital of these companies but do not have control over the day-to-day working of the organization, and therefore management was hired to operate business in the owner's absence. But the shareholders who have invested their money would naturally be interested in knowing the financial position of the company. So they found an increasing need to monitor their financial activities, both accuracy and fraud prevention. And this made the need of appoint independent person who would check the accounts and reports the shareholders on the accuracy of the accounts and the safety of their investment. In the early 20th century, the reporting practice of auditor, which involved submitting reports of their duties and findings, was standardized as the independent auditor's report. The increasing demand for auditors leads to development of the testing process. Auditor developed a way to strategically select key cases as a representative of the company's overall performance. This was an affordable alternative to examining every case in detail, and it required less time than the standard audit. Let's understand the definition of auditing. According to the Spicer and Pegler, an audit is an examination of the books, accounts, and voucher of a business as it enables the auditor to satisfy that the balance sheet is properly drawn up so as to give a true and fair view of the state of the affairs of business and whether the profit and loss accounts gives a true and fair view of the profit or loss for the financial period according to the best of his information and examination given to him and as shown by the books, and if not, in what respect he is not satisfied. I know this definition is very lengthy, but I found it is complete definition of audit. Let's understand this definition in another different way. An audit is an such an examination of the books, accounts, and vouchers of a business, as it is enable the auditor to satisfy that he must satisfy in two things: balance sheet and profit and loss account. The balance sheet is properly drawn up so as to give a true and fair view of the state of the affairs of the business and whether the profits and loss accounts gives a true and fair view of the profits or loss for a particular financial period and according to the best of his information, explanation given to him, and as shown by the books. And if not, in what respect he is not satisfied. I hope you understand this definition through this diagram. Now we will understand the objectives of auditing. The objectives of auditing are divided in two parts: primary objectives and subsidiary objectives, which are also called as secondary objectives. Primary objectives include true and fairness of profit and loss and true and fairness of balance sheet. The next, subsidiary objectives includes detection and prevention of errors and detection and prevention of frauds. These are the objectives of auditing. Let's see one by one. First is primary objectives. Primary objectives of auditing is to prove true and fairness of the results presented by the profit and loss account and financial statement and financial position presented by the balance sheet. Next objective is subsidiary objectives of audit, which is also called as secondary objectives of audit. These are such objectives which are set up to help in attaining primary objectives. They are first, detection and prevention of errors. Errors are those mistakes which are committed due to carelessness, negligence, or lack of knowledge, or without having vested interests. Error may be committed without or with any vested interest, so they are to be checked carefully. Errors are various types. Some of them are error of principle, error of omission, error of commission, error of duplication, and compensating errors. Second objective is detection and prevention of frauds. Frauds are those mistakes which are committed knowingly with some vested interest on the direction of top level management. Management commits frauds to deceive tax, to show the effectiveness of management, to get more commission, to sell share in the market or to maintain market price of the share, etc. Detection of fraud is the main job of an auditor. Such frauds are as follows: misappropriation of cash, manipulation of accounts, misappropriation of goods, falsi- falsification of accounts without any misappropriation. Now we'll see the advantages of auditing. Auditing has become a compulsory task in the business organization. All the organizations like business, social, industry, and trading organizations make audit of books of accounts. Nowadays, owner of business and its management are separate. So, to detect and prevent frauds, auditing has become essential. Its advantages are explained as under. First advantage is audit helps to detect and prevent errors and frauds. An auditor's main duty is to detect errors and frauds, preventing such errors and frauds, taking care to avoid such frauds. Thus, even though all organizations do not have compulsion to audit, they make audit of all the books of accounts. Second advantage is audit helps to maintain accounts regularly. An auditor raises questions if accounts are not mentioned properly. So audit gives moral pressure on the maintaining accounts regularly. Third is audit helps to get compensation if there is any loss in the property or business. Insurance company provides compensation on the basis of audited statement of valuation made by the auditor. So it helps to get compensation. Next advantage is audit helps to obtain loan. Especially financial institutions provide loan on the basis of audited statement. A business organization may obtain loan considering the audited statement of last 5 years. So an organization should make audit compulsory to obtain loan. Next advantage is audit facilitates the sale of business. Valuation of assets is made by the auditor. On the basis of valuation of assets and liabilities, businessman can sell his business. It helps to determine the price of business. Next advantage is audit helps to assess tax. Tax authorities assess taxes on the basis of profit calculated by the auditor. In the same way, sales authority calculates sales tax on the basis of sales shown in the audited statement. Next advantage is audit facilitates to compare. An auditor instructs an accountant in the same way, which helps to compare books of accounts of current year with the accounting of the previous year. So, comparing the accounts of current with previous years helps to detect error and frauds. Next is audit helps to adjust account of deceased partner. Valuation of all assets and liabilities of the business is made by the auditor while auditing books of accounts. Such valuation helps to clear the amount of deceased partner. Next advantage is audit helps to present a proof. If any case is filed against the auditor regarding negligence, auditor can present auditor report as a proof to settle such case. So, it helps to present proof to settle such cases. Next is audit provides information about profits or loss. A businessman wants to know profit or loss of the business after a certain period of time. So, the owner of the business can get information about profit or loss after auditing the books of accounts. Next is audit helps to prepare future plan. All the audited statements remain true and correct. Such true and correct account help to prepare for the future plans. Next advantage is audit helps to increase goodwill. Auditing show the profitability and financial position of an organization, which creates faith of public over the business. Thus, auditing helps to increase goodwill of an organization. Next advantage is audit helps to amalgamate the company. Sometimes some nature of organization may be amalgamated. Auditing makes valuation of assets and liabilities which helps to amalgamate the company. Purchaser of the company can accept such business organization on the basis of valuation made by the auditor. I hope you understand the concept of auditing. In this video, we have seen introduction of auditing, in that how the auditing is originated or invented. Next, we have seen definition of auditing, next objectives of auditing and advantages of auditing. I hope you understand all these points of auditing. Thank you.